What's up, everybody? Though I think I'm just gonna send this to my one buddy because I don't think this video has general appeal. But I'm back. My name's Devin. I am driving to work, and today I'm gonna talk about the stock market. Today is February 7th, 2018, and I want to talk about the stock market, which is not so appealing. So it's just mainly to my buddy Danny. What's up, dude? Yeah. So I'm just gonna jump right into it, and before I say that, I'm gonna say sometimes I think it's hard to say stuff to people that you want to tell them, in ways that are effective. And I don't know. I think stocks is one of those things that you need a little bit more time on. So, Danny, here we go. I have problems with the current state of the stock market. I know that it appears as if it's booming. It has been booming ever since the first day Obama got into office, because that was the day everybody lost half their money in one day. I don't want to get into it. It was bad. And for somehow nobody saw it coming. Nobody saw it coming. People were buying house. I won't get into that. Ever since that day happened, and we had those bad times, it's been consistently going up, and interest rates are low, and and it's very understandable why the economy did so well because other than the housing and people being so tied to the housing and the brokerage people other than that, things were pretty strong. The overall economy, as they say, appeared strong, but it wasn't. And for the last 8 years, we have had very consistent up growth. And for the last 2 years, I don't know, it's looked a little bit funny to me. It's been like an acceleration of the up. And what's funny about that is we had a new president come in. So, but Taylor did a project on presidents in the stock market and didn't find much correlation. And that was his senior project. But the fact is, the only thing that stocks care about is stability. And the fact that Trump won and Hillary, I don't know, the fact that it's been going up even more consistent at an even faster rate ever since Trump got in, and even about a year before Trump got in, I don't know. To me, I smell something there. It doesn't pass the smell test, and what I think that is the market makers and the people that do this all the time see the writing on the wall, and then they just run it up at the last second. And this is exactly what we saw in 2008 in other markets. So, like, for example, then it was energy. It was oil. Oil was kind of the indicator that the traders were having the last gasp of a party, and they ran up the price of oil like 50% in like such a little amount of time, and that was all nothing. And then it crashed, and then oil went even lower than anything else. And I don't know, for some reason when I see the last couple of years, I see traders running it up like they did in 2008, but it's not actually traders running it up, it's computers. And what these computers do is, it's kind of like if you're going to be a long-term investor in the stock market, and you're a bull, meaning you think that it's going to go improve, like let's say 6 years ago, 5 years ago, you're buying when you buy into the market, but you also want to be buying on the dips the whole way up. Every time it dips a little bit, you want to be buying because you're a bull in the market, and you're getting value, and you're getting good discounts and everything you buy into. Well, that's hard to do. You need to be watching it every day, or you just invent a computer to do it. I always think it's funny. You see these crazy like $1,000 downturns, like we saw a couple days ago, and everyone's like, "Oh, we gotta buy more. We're getting a good discount." It's like, no, that's not how you should think about that. Yes, you're right in theory, but you should be buying more small amounts on the way up every single time. Anyway, computers do that now, and I think that's just kind of what we've seen. And I'm just a little bit worried about the market in general. And where I think it should be is zoom out on your graphs when it comes to like the Nasdaq, and just zoom out on Nasdaq or whichever one you want. Kind of blur your eyes a little bit, give it about a 20-year horizon, and then blur your eyes and just get a ruler. And then just follow the line. Follow the best line that you can find on like the 20-year, maybe 5-year. Just pick a ruler and then pick what you think is the growth that seems normal. And these lines pop out very, very easily. I remember in school the teachers were lazy. They wouldn't teach you this stuff, but you can do it. And you're gonna see that ruler is gonna end up way lower than the market is now. And I don't know, I'm seeing it around 15, 16. And that's where I'm liking it. I don't know. And I could be wrong. I could be wrong, but I've lost a bunch of money in the stock market before. And in one day, and we got screwed. No one saw it coming. Fundamentals of the economy were strong. Boom. All gone. Anyway, just watch out for that. And you know what? It's weird. This stock market is huge, but I know less people that are actually in it this time around than I did in 2008. And you know, that's probably just because I had money in the market, so I would just know other people that do. But I don't know, this market seems much more. These gains, these profits seem much more directed towards a smaller few, and I don't know. I think that makes a difference too. And I just, you know, sometimes you just see it's kind of like a horse with blinders again, where you talk to somebody about the stock market, and they're completely, everything's all good. They're completely rational. They're completely thinking about everything until everyone kind of looks the other way on something. You know, it seems like all of a sudden, I don't know when that happens, but consistently, everyone in the industry puts on blinders, horse blinders, and just keeps on going. And I don't know, I'm seeing a little bit of the horse blinder phenomena from people that are, I don't know, that one, actually, no, I'm not going to bet on that one. Maybe not horse blinder phenomena, but people just, they don't like to talk about it. And I remember in college, I wasn't the best student ever, but it was weird when you're taking these, is that a cop behind me? Is that a cop behind me? No, not a cop. When you're taking these business, like economics courses, they have graphs. And then I always found it funny that they had like separate graphs, because like your demand and like your reason to keep on producing something, it all matters. Like if you're making money or if you're losing money, your short term and your long term profits or revenues, or you know what, I don't know specifics, but over these charts they would always put good times with an underline, and then they'd put bad times with an underline. And I always found that very funny that they just called it good times and bad times, and during good times you gotta do this, and during bad times you gotta do this. And I just thought that was just them not knowing anything. It's like, oh, good times, that is so funny, that's like, I thought that was a TV show. But it turns out that there actually are good times and bad times always come. And I don't know, I just would like everybody, all my friends with money, everybody just to take a look and just at least realize that the last 8 years were good times. We have been on the left side of the board all day on the teacher's office. We have been in the good times board, and that is the fun board. But there are bad times, and we're about to go over to the bad times. And you know, in school, this one only got about 10% of the attention, but it always existed. And I think we should realize that we might be making that transition very, very soon. And how it happens is usually pretty nasty, and people with money tend to catch knives. So anyway, just think about that, guys. But I mean, I'm not saying get out of the market, but just realize exactly where you're at, and don't be catching knives. And you know, at least something good. I would like to at least say a stock that I really love. And I've loved this stock for about a year now, and that is Nintendo. If you think about what Nintendo's done over the years, it is insane. It's such a great business. If anything, they were the first people to, I don't know, in Silicon Valley, these businesses like Netflix, they get into mailing DVDs, and the next thing you know, they just do something else that's just as good. And Nintendo went from like a behemoth that made some mistakes to a business that is now pivoting like crazy, and they made themselves profitable while setting up for the next couple decades. Take a look at that stock price. It is going up. I think that if you are going to go through the bad times chart, you can't pull out completely. Nintendo would be a great place to go. I would take my money and I would just put it in the garage or the house, and all day long Nintendo. That's what I'd be doing. And buying gold. And I just think slowly selling off in the stock market, it can't be a bad idea. You know, go out to 20 years, blur your eyes, and just get a ruler, make a line, and then just be honest with yourself, people. And Nintendo, great place to park your cash. They got the best thing. Their console sold like so many millions. The only game they made was a Nintendo license. They have the Switch. They got Pokemon Go. They set themselves up for the future, and they finally figured out media a little bit. Check out Nintendo. I mean, everybody should be reading about this. Their sales are through the roof. Everybody loves them. They finally, I don't know, when videos first came out, like video games, the incentive alignments were off. People, like, because of the rental industry, and Nintendo did not handle it very well at the beginning. They made mistakes. They should have made that deal with Sony. But since then, they have figured it out. And they're like, you know what? We're going to be around for a long time. Let's just do the long-term strategy. Let's get profitable without selling anything. And then let's start selling stuff. Well, now they're selling stuff. Anyway, thanks for listening. Good luck with your money. You know what? I wish I had more. But good luck with your money. And I am not an expert in stocks, so please don't listen to me. See ya.